Hello, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news of more odd market signals. Core data is weaker, but equity market prices are rising. Firstly, equity markets are broadly higher today. The trend started in Asia yesterday with Shanghai up 2.1%, Hong Kong up 2.2%, and Tokyo up 0.7%. Then overnight, European markets chipped in with rises of about 1.3%. Wall Street is also up more than 1% in late trade. Driving these rises aren't economic fundamentals. In fact, just the reverse. Markets everywhere are anticipating a new round of significant stimulus as these fundamentals weaken. US policy has caused the downturn, and to save it from itself, even the US administration is calling for help from the Fed. They say they need a big rate cut and new QE. All eyes will be on Jay Powell on Friday when he gives a speech at Jackson Hole. In the US, RV sales are falling, and that is often a signal that consumers are pulling back on discretionary spending. Interestingly, rising costs due to tariffs are getting the blame. In Manhattan, apartment sales are struggling too. In China, they're about to loosen the debt limit they have on provincial governments who want to invest in local infrastructure. There's currently an annual limit of about $500 billion for this nationwide. But the need for new stimulus is growing, and that limit will soon be raised. Others are calling for an even wider stimulus effort. Japan's exports retreated for the 8th straight month in July, while manufacturers' confidence turned negative for the first time in over 6 years. Exports to China slumped again, and the worry is that these declines could tip Japan into recession. In Germany, their central bank says the country now may be headed for a recession as businesses pull back on investment. Yes, despite all this, equity markets are rising today and globally. That puts it all on the US Fed to rescue the clear disparity. Even bond markets sense major American and Chinese stimulus is on the way. The US Treasury 10-year yield is now at 1.56, a 4 basis points rise overnight. Gold is now at $1,498, and that's a drop of $15 overnight. US oil prices are a lot firmer today, up $1 to just under $56 a barrel. The Brent benchmark is up to $59.50. An attack on a Saudi oil field is one reason for the rise, but OPEC itself is no longer bullish about demand. And the Kiwi dollar is a little lower today at 64.1 US cents, and that's now a 3.5-year low against the rising US dollar. On the cross rates, we've slipped a little to just on 94.7 Australian cents. Against the euro, we've dipped to 57.8 euro cents. That sets the trade-weighted index back to 69.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.